Hey guys, Eagle Trading checking in. It is 11:05 p.m. This will probably be posted on Sunday, so it's getting late. I don't want anybody to have to log in and look at their computer at 11:05 p.m. on a Saturday. But I'm finding some interesting patterns here, and I'm going to show you what I'm looking at. And I got a couple good trade setups, depending on how we open Monday, to either go short or long, possibly Tuesday. And it's going to be a little bit of a twist on what everybody else is looking at. My Fibonacci's are a little bit different. My trend lines are a little bit different. So, but let's digress here and look at the bigger picture on the S&P 500 SPY. I think we're hitting a cyclical top here on the economy. So regardless of the coronavirus thing, I think that the market probably would have started to roll over at some point or topped out, when things are perfect with unemployment and earnings, et cetera, et cetera. It's just like when things on the bottom couldn't get any worse. The only way is up from there. Same thing in reverse on the top end. When things can't really get much better, you're probably hitting a market top. And there's a ton of other things that I look at, and I'll go into those in detail later, but I'm pretty confident with this top here. The channel line also goes further back all along here until we start this cycle in 2010, however you want to call it. It's been a 9-year cycle, a little bit over 9 years if you go from this breakdown and then starting back up. So in any case, that's my channel. The lower channel is kind of a gravitational area that I've been looking at. And it's interesting too, even though it's not touching the bottom, it's not considered a lower channel. It's pretty consistent with the way the market wanted to pull back to when it got extended to the top of the channel. Pull back there, and if we failed through it, it turned into a correction and then became resistance on the upside in this ongoing long channel. So I think it's pretty fair to say that the market's going to want to pull towards this lower trend line, just like it's gotten in every situation here when it snapped back and then pulled back. And now you're going to try to snap back up this line again. So it's not completely off the table that if we blow through those fib numbers, that this is going to be a huge, huge layer of resistance, which depending on the time frame puts us around 295, 296. So my short thesis has a pretty good risk-reward ratio, using this as our cover on the top if we hold over this for a period of time. I'm also using a different moving average. I'm using a 35-day, and I'll show you the Fibonacci setup that I'm talking about, and we'll close this thing out really quick. So the structure of this pullback is also very similar to this one, even though the trajectory is a lot sharper here. The time frame from the initial bounce, well, you have a few bounces here, but from the initial pullback and then the last bounce before the V bottom is 13 days here. The bounce in here, which I can show you, is this area right here, is 13 days, I believe, to the bottom. 13 or 14, they're both very similar. I'm also using a 35-day moving average, and what I'm doing is I'm taking a simple moving average based on the amount of days from the initial sell from the top, depending on what the stock is, because some stocks didn't have this initial sharp drop from this particular date. They might be 2 or 3 days off. That's why I'm a little bit bullish here, because we're breaking the 35-day, whether it's the SPY or the QQQ. When we zoom in, we're breaking this 35-day, and it's an area of interest here because nobody's using a 35-day, but it's a battle zone and pulling away further with obviously the relative strength on the QQQ. Even the Dow Jones Industrial Average. Let's look at that real quick. You have to forgive all these crazy lines. I use these for intraday trading and stuff. Once again, forget these lines through the 35-day moving average. And this one might be off a few days depending on when the break happened. It could be a day off. It could be a 34-day. But we're pushing through that. So the trade setup is definitely to scale in on the Fibonacci numbers that I'm drawing. And I'll show you what I'm looking at. As far as SPY, I'm going to pick on the S&P 500. And let's zoom in real quick on the SPY. And we'll close this thing out and we'll chat tomorrow. And let's look at the daily. Actually, we can zoom in from here. So if we zoom in on the SPY recent move, I'm going to run my Fibonacci from the bounce to the close at the bottom. I don't think anybody's doing this, but they're doing it from the top. I'm going to run mine from here to the close, not the bottom, the close. And this is kind of what I'm looking at. Maybe I should have pulled it down a little bit because I want to catch that last candle, but in any case, it's pretty close. So my 61.8 is actually the market's 50%, right around 280, 279.20. What happens in Fibonacci movements is if you get stretched beyond a certain point and can't get to the next level, it usually snaps back. So for instance, we got over the 50% here. Remember, we're dealing with my Fibonacci number here, not the macro, more traditional technical analysis fib. So usually when you can't reach the next number, it's because the market wants to pull back in the other direction. The same thing happens, when you pull back to sell-offs too. You want to snap back. We couldn't touch the bottom here. You wanted to snap back closer to the other number. Here you couldn't get to that 50% retracement, and you wanted to snap back and touch this number. I kind of think the same thing's going to happen in here. If everybody thinks that we're pushing through to the 293, 294 area, I think the energy runs out and we snap back to the lower area. So my trade setup for the short thesis is probably start scaling in around 284, 285. And if we get up to the top number, which is between 293 and 296, I'll probably add, because I know that this trend line that we talked about on the lower channel is going to be a huge layer of resistance. And if it pushes through, it's not going to hold it for very long, in my opinion, especially if we continue up there on one leg here. So that's the short thesis. Start scaling in around 284, 285, half a position. We can add another half position at the top Fibonacci number, which could be between 292 and 294, depending on how you run your fib. And then I think we leg back down for a nice profit. The ratio is good on the risk reward, simply putting this as your cover area if you hold above this for a few days, which I don't expect will happen. I think this is going to cause a lot of energy to the downside, even if we get there. And I'm using a 35 SMA. I don't know if I said that before, but I'm taking the average days from the sell-off. Currently that's the 35, and I'm adjusting it daily. And this is why I'm somewhat bullish on the market. A lot of the stuff that I'm looking at is above the 35-day. I want to see the average. It's hard to use a 50-day moving average when you're going back this far and you have this sharp of a move. So I want to count the days from the sell-off and adjust my daily number. So I think currently we're at like 34 or 35. So I made it 34, and you can see how that's worked out pretty good. You can also see how it's worked on, let's say, the Dow Jones Industrial Average. We're above that 35 number as well. And you'll see, let me see if I can move that over a little bit. I'm only using it in this context of this time frame here. You can see we pushed over it again. A little bit of indecision here, but let's see what Monday brings. We have a setup for both ways, and we'll talk about the long, if we're going to go long too. If we pull back Monday morning, what areas we want to go long at, what stocks we're looking to buy on the balance. And then you can see the QQQ, which has been the strongest, and we'll close with that. Here's your QQQ, which held the long-term trend line, by the way, in the bottom. There's also a channel on the QQQ, but ignore all these crazy lines that I have. But you can see it's actually been the strongest area. In fact, if you zoom in on there, you can see that we kind of touched that line, and we're pulling away from it. It's a lot stronger than the S&P 500 and the Dow Jones Industrial Average. So let's finish up with that. Last thing I want to show you is the HYG. That's the high yield corporate bond. That's kind of giving us direction. The market's kind of juiced up here a little bit with the Fed's influx of multi-trillions of dollars here. And that's pretty much evident in the HYG. Once again, the HYD does the same thing on the Fibonacci's that I use. First bounce area, right? Down to the bottom in this one. Congestion there. Fighting here. Couldn't pull back to the lower number because it wanted to go higher. Couldn't go to the next number. Right here it failed because it wanted to go lower. Same thing here. Pulling back. But we're going to do the same setup. But we're this actually got fired up pretty good. But failed below that line. But we're going to run the same type of trade setup on the S&P 500 and see how it works out. Talk to you all tomorrow. Or if it's Sunday, I'll talk to you all Monday morning.